All right, welcome back, everybody. This is Kyle Bazzi, president here at Benzinga.com with the Benzinga Fintech Awards. As you know, if you've seen some of the other interviews and you checked out the site, we are looking for the most innovative companies and products with one end goal in mind to help you create wealth. Up next is HedgeCoVest and CEO Evan Rapoport. Evan, thanks for joining us.
Thanks for having me, Kyle.
All right, cool. Well, we just had a really great conversation, and I've learned a ton about your business, and it's one that I am particularly passionate about. Tell us what HedgeCoVest does, and give us a little background on the company of how it came about.
Sure. So HedgeCoVest is the first online investment platform that allows all investors to invest with hedge fund strategies within their own brokerage account. So for the first time, both accredited and non-accredited investors are able to allocate to hedge funds with as little as $30,000, and they're able to do that within their own brokerage account.
Awesome. So let's get into how you saw this problem out there and decided to go attack it and solve it.
Sure. So as a firm, we've been in business for 12 years. That is the parent company of HedgeCo Networks, and we've been raising capital for hedge funds during that entire time. One of the biggest problems that our investors faced is that they oftentimes would rather have a separate account as opposed to investing in the hedge fund direct. The problem is that most hedge funds won't provide a separate account unless the investor is able to invest $50 million, $100 million. As a result, a lot of these investors cannot obtain that separately managed account. And so HedgeCoVest allows the investor to come in with $30,000 and to have that same privilege and those same rights that the institutions are able to have currently. Best of all, for the fund manager, they don't have to change anything that they're doing daily. Our software basically comes in, is able to receive a broadcast of the signals, their trades, and is able to replicate those in real time.
Okay, I love this concept, democratizing these trades that are usually only held by an elite few. Being in the hedge fund world, I've ran into a ton of cases where, somebody wanted a $250,000 minimum investment for their hedge fund, and for most people, that's not feasible. So tell us how the platform works. You're connecting hedge funds and investors, but exactly what happens in the inner workings of the platform.
Sure. So an investor can come to HedgeCoVest, any investor again, and they can search the hedge fund models that are available via qualitative and quantitative criteria. Once they found a hedge fund model that makes sense for them, they can go ahead and click a button to allocate. And if they're not currently, and they don't currently have an account open, they can open an account with one of the brokers that we have relationships with. Currently, we have relationships with Interactive Brokers and Pershing Advisor Solutions. We'll be expanding here in the first quarter of 2015. But once they've gone ahead and opened their brokerage account, they can go ahead and click to allocate, and at that point, our replicator technology, which is the name of our technology, essentially is able to code up to a hedge fund manager, see their portfolio, and start replicating it in real time directly into the client account. So when the client's allocated, they're actually getting the same trades in the same portfolio that the hedge fund would hold, only within, again, their own account. As a result of having their own account, they have security. Their accounts are SIPC insured, protected, truly separate, not segregated, not commingled in any way. They're liquid in that the client can additionally allocate, where they can liquidate at any time, intraday, end of day. They can customize the portfolio, so for the first time they can lever up, they can lever down, they can really modify the portfolio to meet their own risk and return objectives. And again, they're able to pay a flat fee as opposed to a management and incentive fee, so we reduce costs, and we only charge a 2.5% flat fee.
Okay, cool. So now I also, as the investor, have a cheaper alternative as well. We're going to get to more of the investor in a bit, but let's talk about the hedge fund side. How are you vetting these hedge funds? Where are you finding them? Who's coming on your platform? How many funds do you have? Can you give us a little background on what that side of the platform looks like?
Sure, it's a great question. So again, being in the industry for 12 years and running a very large database at HedgeCo.net, where we monitor about 8,000 funds, we've established some amazing relationships with hedge fund managers and hedge fund firms. In establishing those relationships, we've been able to go through and choose certain managers with strategies that we think would be appealing. Of course, doing the due diligence on our side and providing investors and doing, again, on our side, the third-party background checks, employment, criminal, credit checks, but then, of course, also making sure the philosophy is appropriate, the pedigree of those managers is appropriate, and the performance is certainly worthwhile and marketable.
All right, very cool. So we got the supply now. It's adding liquidity to them as well, which is important. I've met a ton of great hedge fund managers that had a hard time growing their fund, mostly because they're not a good sales guy and they don't have that team. So this is kind of cool, a better way to surface the best hedge funds out there. Now, in turn, talk to me about the problem that these investors have seen in terms of minimum requirements, anything else that restricted them from actually investing into hedge funds in the first place.
Sure. So first of all, only accredited investors can currently invest with hedge funds. The only way that non-accrediteds can invest is through the liquid alternatives or the alt mutual funds, which some may consider a watered-down version of an actual hedge fund. With HedgeCoVest, they can be, again, accredited or non-accredited. Doesn't matter because anybody can own a basket of stocks and options. You don't have to be an accredited investor to do that. They also have the ability to allocate towards strategies that they feel are appropriate for them, and understand what's actually going on within those portfolios. So the problem with blindly investing in a pool is that you may look at a portfolio on a monthly basis that have 12 data points and think that vol profile, for example, is what you're looking for. But without seeing the dailies, you really don't understand how that portfolio is going to perform in adverse market environments. And we're fortuitous to have October sort of past us, and that we've seen a market that has fallen off a cliff, basically, in the month of October, and then rebounded within that same month. So when you look at certain fund profiles, vol profiles, you won't notice how volatile they were intra-month. You'll see that that monthly number of up 1%, flat, down 1%. What we're able to show with HedgeCoVest is the daily statistics, the daily performance of those managers. And what you'll find is many of these funds that you thought were market neutral-like were actually highly correlated and had much more volatility than the investor thought that they were buying into. At the same time, what you're also finding is, and what you're able to search out, is funds that have performed and did do their job during those adverse market conditions. And so, for example, we've got a market neutral product on the site that missed that entire downtrend and continued to move on upwards, which is exactly what they should have been doing. Without having that monthly data, you would never have understood that.
Now, since these trades are being made actually in my brokerage account, as an investor, can I liquidate my account at any point, no matter what the hedge fund's doing, and have that control?
Yes, you can. So because it is your own brokerage account, you have the dashboard, your dashboard, where you can point, click, and liquidate. You don't only have the ability to liquidate the individual portfolio, you can liquidate all of your portfolios with one click. So if there is a problem overseas, there's a bomb, God forbid, that hits somewhere, and you're nervous about the market, you can click that button at 10 a.m. and get out. This is very different, as you know, Kyle, than a hedge fund investment where you're traditionally locked in 30, 60, 90, even a year, or even an alternative mutual fund where you have end-of-day liquidity. Here you have that intraday liquidity, and unlike an alternative mutual fund, you also have the ability to, again, lever up, lever down, and have that increased transparency, because to your point, these trades are being conducted in your brokerage account, so you'll actually see the positions that you own. And then you can take those and you can correlate those with the rest of your portfolio. One of the benefits to having true transparency. By the way, you asked a question before, and I didn't exactly address the question, and that was the type of hedge fund managers and firms that are coming on board. So we've signed, by the way, 40 hedge fund firms pre-launch. Aggregate assets coming from those firms of over $80 billion. So yes, you have some smaller managers that have a hard time raising capital, but you've also got some pretty sizable firms in there who understand the potential investment coming from the retail community, the non-accredited community, and the pent-up demand within that community for hedge fund-like product.
That brings up a good point that I wanted to address as well. If these hedge funds are raising at 2 and 20, and they're just doing a revenue share with you, what's the incentive to actually come on to HedgeCoVest for those hedge funds?
So it is, of course, the ability to address the mass affluent, the larger community. Right? While the hedge fund industry is $3 trillion, the larger community is obviously substantially more than that, right? Estimated to be $30 to $50 trillion worth of opportunity. And so when you look at liquid alternatives and the growth within that space versus the existing hedge fund space, you'll see a big difference, right? The alternative mutual fund space is growing at 44% a year, somewhere thereabouts, where the existing hedge fund space is growing at 5 to 8%. So there's a monster opportunity for these hedge funds to be able to provide a product to the mass affluent that they currently can't provide otherwise.
Smaller piece of the pie, but a bigger pie still buys you a bigger yacht, right?
Well, I think there's this conversation about decompression, and it's becoming more and more prevalent in that the markets are screaming up, and hedge funds aren't managing to catch a lot of that upward movement because they're not long biased, right, or long only. And so, as a result of the increased competition, as a result of the markets screaming higher, and hedge funds not, for the most part, able to correlate in terms of performance, the full amount of the upside, you're seeing a lot of fee compression. And so, while the managers are taking less with us, candidly, a lot of these managers are taking less with individual investors in side pockets or side letters, not side pockets, side letters. With some of these investors and are looking to grow. One more point you made, other point you made earlier, and that is that smaller hedge funds, those that I'll say smaller are sub $2 billion, those hedge funds actually aren't growing right now. The large majority of the assets are going to the $2 billion plus class. And so there is this huge desire to grow, right? And the current environment doesn't provide a lot of those emerging hedge funds the ability to do so. And so being able to address the mass affluent does give them an
Great. No, that's the whole goal here, too, of the FinTech Awards, is to try to figure out how to take these tools, this information, this education, and bring it so everybody has access to it. And I think the huge point that you made was unaccredited investors can now have access to this stuff. Before we get into your wrap-up, and we want a 30-second elevator pitch on why you guys deserve to win this award, here at Benzinga, can you talk to us about how an investor would come in and actually learn what fund is right for them? So what do you guys do? What's the process like for me walking into HedgeCoVest.com and figuring out, hey, this one's right for me, or this one's not?
Sure. So, of course, they have the ability to search for products both by qualitative and quantitative criteria. We provide an array of information on the actual management team. Everybody that is, at least all the fund managers on HedgeCoVest are also registered as investment advisors. So there is that certain level of security and, of course, the due diligence that can be done on the advisory firm. But they're able to search the biographies. They're able to see the performance of that individual product, both in a daily and historical perspective. They're able to understand the philosophy, the manager viewpoints. But most importantly, again, they're able to search using the tools that we have available to see what products would be best for them. On a going forward basis, within the first quarter, they'll also be able to buy these products via our own sort of multi-manager products. And those products will be bucketed in various ways. Some of the products include core, stable, aggressive. So if you don't have the ability to sort of navigate the database and choose individual products, you can sort of understand the risk level that you're going to take, the risk that you're going to take rather, and then choose a HedgeCoVest product that meets sort of those risk parameters and also, of course, return objectives.
All right, great, Evan. This was fantastic, man. I love what you guys are tackling here, and it is a huge opportunity if done right for these retail investors. Give us a 30-second elevator pitch here and wrap it all together for us. Why does HedgeCoVest deserve to win the Benzinga Fintech Awards, creating wealth for the everyday person?
Sure. So on the elevator pitch, basically, HedgeCoVest is the first online investment platform that allows all investors to mirror actual hedge fund portfolios into their own brokerage accounts in real time. We spent the last 4 years developing a proprietary technology called the Replicator that's able to see hedge fund portfolios in real time. And when a hedge fund makes a trade, the Replicator sees that trade and within milliseconds then makes a corresponding trade for our clients and delivers it directly to their brokerage account. As a result, we are giving clients the same or close to the same portfolio that the hedge fund holds, only again within their individual brokerage account, and giving them the control to be able to allocate or liquidate at any time and customize that portfolio. Why I think we should win the awards, Kyle? When I think of innovation, I think of game-changing technology. And that's truly what we have here with HedgeCoVest. We're taking a 65-year-old industry, the hedge fund industry, and making it more efficient, making it more cost-effective, making it more liquid, transparent, and secure. But most importantly, we're making it accessible to the regular investor, to the mass affluent, in addition to, of course, the existing accredited investors. Again, talking about innovation, this is a product that is new. We're not taking an existing technology and building upon it. We're actually creating a new one.
I got a good tagline for you, Evan. They say everything worth it in life is free, but you can give it to the birds and the bees. I want money, baby.
That's
Evan,
right.
Thanks for joining us, man. HedgeCoVest, appreciate your time, and looking forward to seeing how the judges react to such a cool platform and transformative technology here in the hedge fund world for the first time ever unaccredited investors. Evan, thanks for joining.
Thanks so much, Cal, for having me.
All right, everybody, that is our next edition for the Benzinga Fintech Awards. Please go to benzingafintech.awards.com to vote for HedgeCoVest, or look at the other 100 companies we have trying to innovate the fintech space to help you create wealth for the everyday person. Again, this is Kyle Bazzi from Benzinga. We'll see you next time.